Is your organization fully compliant with PF Provident Act? A small PF compliance mistake will lead to interest, penalties, inspections, and costly litigations. In this video, I will explain the complete Employees Provident Fund Act 1952 and the latest 2016 updates. We will cover PF applicability, employee eligibility, wage definitions, contributions, withdrawals, penalties, and compliance requirements, and important practical issues for every employer, HR professional, and a CA student and a chartered accountant who already completed should know about this act. I am Gangadhar Reddy B. You are watching CA Gangadhar Reddy B channel. Let's get started. So today, as I discussed, we will complete about the PF Provident Act 1952 and other miscellaneous provisions act. So in this we will complete entire when it is completed, and what also 2016 latest updates till date. From 2024 to till date, there are few changes in PF acts, minor and major changes that we will discuss here. Okay. First of all, what is this act? Entirely, this PF Provident Fund and Employees Provident Fund and Miscellaneous Act 1952 is retirement savings. It is mandatory for retirement savings. It is mandatory act. Everybody has to compile this act. It is applicable to establishments and regular PF employees, and it involves, there are 3 to 4 schemes here. First scheme is the Employees Provident Fund scheme. Here entire 12% will go to the retirement savings account, the first one. And this second one is pension scheme. Out of your employers contribution, 8.33% of the PF will go to the pension scheme. There are pension options also that I will tell. And employee deposit linked insurance scheme 1976. This famously known EDLI scheme. This scheme is give life insurance for employee members, I mean EPF members, for this percentage up to 7 lakhs. So I will highlight this in the next while going this video. So first of all, we will see applicability and coverage. Okay, based on the latest updates, who are applicable for PF Act. First one, whether any establishment with more 20 or more employees must register the EPF. Employee count is permanent, contract, part-time, and probation. Everyone has to be count for this 20. Earlier it is only for permanent employees. Now it has changed from the year to year. So you should check all your employees count, even though they are in contract or in part-time. Okay. And the second one is scheduled industries. There are few industries government already scheduled, even though if you guys are less than 20 employees count, still you must register for PF Act. Those are textiles, constructions, and mines, etc. There are few industries as well. And then wage, basic wage. This wage is up to 15,000. Up to 15,000 mandatory. Every employee should cover. When it is not covered, we will discuss in the later. See, if it is a first time and is already more than 15,000, you can opt, unless you don't have any previous PF registrations, you can opt for exemption. But this is not, once it is covered, it is always covered. So that is what is saying. Once it is covered, always covered. Voluntary coverage. Your establishment is less than 20 employees can voluntarily take the PF registration and do compile. Once it is registered, they has to always bound. Okay, once they registered and they later you don't want to reduce, and all, it will not possible. In future, if you reduce the number of employees, you cannot unregister the PF Act. Who is exempt? Generally, state establishment, PF establishment covered few states, and that is Jammu Kashmir, now mostly majorly with central PDF. Okay. Then cooperative society, which is less than 15 members working without power aid, are exempt from this PF registrations. And private trust approved companies with own EPF fund approved trust exempt if trust rules are equally beneficial. So these are little complicated issue, because you need to create own fund and you should use for the particular equally benefits available to the employees. Then you can get exemption for this government registration. employee basic is more than 15,000. Those earnings based at the time of joining, he may opt for existing members must to continue. He may opt for exemption. So a particular employee joining on 1st June 2026, on 1st June 2026, if he opt for exemption, so he cannot get for the UANM or something for PF registration numbers and all. But once he covered, once he opted, or else previously he had a PF number in earlier organizations, he should not opt for exemption. He should register PF for new entity as well. If it is a new employee, based on these limits, he can opt. And the genuine apprentices. Genuine apprentice means they came for the institution rules and came for apprenticeship, so they are not employees, they did training period and all, so those are exempt from the PF registration. And proprietaries and partnership less than 20,000 to 20 count, so small firms, those are exempt. So any establishments are exempt, but few are, this is already covered here. If it is more than 20, you have to register. If it is less than 20, you don't need to register. So this wage seal limit is 15,000 here, right? So in 2026, it has increased to 21,000. This limit increased to 21,000. This was proposed in 2025 budget. So waiting for the final gadget. In most of the cases, it will approve. So PF coverage will increase. So we will see 2026 amendments what will happen. So wage limit has been increased. This still under the gadget status. So impact on this wage ceiling hike. Once it is increased, the coverage of the employees count will increase. Employee cost will increase 720 per month per employee per employer. For each employer, for if they have 100 employees, they need to for each 100 employees 720 rupees will increase, and employee take home reduces by 7, of course, right? In earlier it was deducted 1,800, now it is deducted 2,500 something. So the 6K per year will deduct from your take home salaries once this approved from the gadgets. And then higher pensions will go. Obviously the pension calculation will increase, and effective should be still has to come. And earlier Supreme Court members opt for the pension for, earlier there was a higher pension scheme, right? Supreme Court, the higher pension scheme, earlier it was not capped for 15,000. So in 2023 it is in online, and employees both need to apply. And then in 2024 filing deadline has been closed. Now in 2026 still in the cases. So what is it means? Employees pension has to be increased. Earlier it was no ceiling limit and all, not capped 15 and all. So now it is capped to 15 in 2022. They have removed that code under this order. Now the minimum pension 27,500 per month has been uh, proposed. So not yet officially signed. This the pension on 50,000 actual wage versus 15,000 cap. So this will tell you later. I mean in the next part of the video. But as on 2026, PF has to pension has to be minimum under this rule. So this has to be finalized, finalized. So these are the all changes in 2026 as of now. The wage limit is going to increase. So this will cost to the employees, and all this is still under pending stage. And the EPF interest is still confirmed for 24-25, but 25-26 not yet confirmed. So it is under still negotiation, but there should be a expected range of 8 to 8.25. Higher EPF pension, Supreme Court on actual wage allowed. So this is also processing. Indeed, pension liability. I mean, your pension liability will increase in the future. Minimum pension, they are proposed from 1,000 to 7,500. This is also not notified. And ATM card, this will increase the member convenience. And also EPF portal, that is also faster for faster resolution only. So e-nominees now available, and so all employees should nominate their e-nominees. And Aadhaar sending, this is now mandatory for every KYCs now. And admin charges, it is supposed to increase now. This should be reduced. Earlier it was 0.65, now it is 0.05. So there should be reduction in this administration charges. So it would be benefit for the all of the employees and the employers. And this benefit, Earlier it was 7 lakhs. Now it is review for going to 10 lakhs. It's still not currently changing, but it would be under review. And risk inspections. So data driven target inspections, all these are effective. Compliance is critical. So it means there are some inspections has to be done, that is that driven and employer impression, all this has been changed. Earlier officers can't inspect the offices. Now they can inspect office. So how our PF contribution will go. So entire structure and percentage, there will be 12% of the basic and DA, 100% go to EPF account. This is for employee contribution. We have two contributions, right? One is for employee, and second, the same contribution employer also will give. So you say, suppose if you give 15,000, 12% one 1800, the same 1800 amount will give by employer also for your company or your organization will give the same contribution. So this is on dearness allowance and basic allowance, basic wage. On basic we need to calculate. Wage limit is 15,000 mandatory member list, but it is increased to 21,000, but that is under process. And then contribution is more than 12%, no employer match. So if you want to contribute 20% or 30% on your own, but employee should pay 12%, would be legally compile for inside. So tax benefit, this is reduced under the 80C deductions under old act. In new act there is a separate procedure. Employer contribution, if the employer gives 12%, same 12% on this basic and DA, it will split into three schemes. One is employee pension scheme, that is 8.33%, and employer provident funds under 3.36, and under insurance scheme 0.5%. Admin charges go to 0.05% again. So admin charge has been revised to 0. Earlier it was 0.65, but it was revised to 0.5. I am coming with the new percentages. So your 1500 or 1800 will go like this for employer contribution. For employee contribution, entire your 100% amount goes to the provident fund account. I mean retirement fund account. Here retirement fund account only this much. Balance will go to pension, insurance scheme, and admin charges. I hope you understand this. And definition of wages. Everywhere we are mentioning wages plus dearness allowances. So what is the definition? So the year includes and excludes the basic wages. The basic salary we will include, dearness allowance we will include, retaining allowance paid to retained employee is included, cash value for food coupons are included, special allowances is universal. If it is universal, means all employees are getting same pension. Say suppose they are getting special allowance 2,000 every month to all employees in your organization. It is called universal allowance. So in that the paid it is paid to all employees irrespective of any conditions or irrespective of any like any incentives or commission basis. So that has been included here. So if employee is getting any commission or incentive based on the sales or performance or something kind, that has been excluded. But if it is without any such kind of condition, if they are getting salary, that is special allowance only, that will be allowed. I mean included in the basic wages. So in the minimum 15,000 it should include. And then variable DA linked with the consumer price index are included. Obviously, if it is in DA, if it is in variable DA, say suppose sometimes they will pay year end once in a year. So that will be included in the PF wage definition. And what are the excluded? HRA is dependent from the, even though it is fixed for organization, specifically excluded in PF calculation. And overtime wages, even though it is universal nature in all, there should be a percentage. I mean it is percentage on the basic and all, no, so that would be different. And then bonus is also different from every employer. This is also excluded. And overtime wages, if some employees overtime for 2 hours, some employees overtime for 1 hour, So based on their performance, I mean their overtime basis, it will be changing. So it is also not an universal base, universal allowance. So this is also excluded from the wage definition. And commissioner incentives based on the performance and sales, it is also excluded. And gratuity is specifically excluded by the government from the definition itself. And medical and insurance coverage or whatever it actual reimbursement, this is also not excluded. This is also excluded. So I hope you understand the definition. And this, the Supreme Court Vivekananda, allowances paid universally and ordinary to all employees must include in the. This is also we already include. Vivekananda, we already tell that. So that because of this case, this has been including in definition. So now interest rates for historical interest rates. This is just for the information how PF has been paid interest to the PF holders and what are the exemption limits in the tax treatment. Earlier it was 8.5, 8.5. Now in the past 5 to 6 months, I mean past 3 years, it is restricted to 8.1, 8.25, and then current year also it has been completed same. 25, 26 is under still under review. So under this, I hope you understand this, that how much interest rates will pay by the government. This will decide in every budget. So again, so the exemption earlier it was fully exempt till 1920, it was fully exempt. Now it in the from 21-22 it is restricted to 2.5, and if it is total interest is above 2.5, it would be taxable in your regular uh, tax income. Say suppose if you contribute entire your salary to PF and reduce taxes, no, that will not allow now. So earlier till 2019-20 it was allowed. From 2021 to the till date, if it is more than 2.5 lakhs of interest, it is exempt. If it is more than 2.5 lakhs from per year, it more than if you get interest of 3 lakhs up to 2.5 is exempt, balance 50,000 is taxable. I hope you understand this too. And then universal account number and EPF digital services. Here in 2026 everyone has to apply the, earlier also it was there, but every employee for their life changes employer or member ID changes, whatever it is, it is remains same. Earlier you need to transfer from old account to new account. Now there is no such kind of requirement. You can continue with the same UAN number assigned by the EPF via employer. Employer will apply for you based on your Aadhars and your KYC details. Once they update the KYC, there are some mandatory KYC fields in there. So they need to compile our mandatory KYCs and other linked online bank account and for claims and everything. Without that KYC, there is no online portal issues will come. So auto transfer on job. Since 2023, PF auto transfers to new employee if UAN is the KYC verified. There is no form required for that. Earlier, we need to submit the form to transfer the PF accounts. Now you can easily by online transfer your old PF balance to new employee balance. I mean from old company to new company without having any forms. So other OTPs for withdrawals, that is mandatory for now. And then digital services, what are the digitally available? So without employer you can do these kind of services. You can do this mobile app, or you can go by the portal and check. And there are the nominees also, you can form this file online. And also auto PF transfer. Now we already informed here, auto PF transfer. And PF withdrawals online you can apply, and a few verifications you can get it. And PF ATM card has been given limited access only. But AIS and the information system, in this also the annual information system also your PF interest and everything has been updating every year. Now coming to the important part, that is withdrawal part. When employee can fully withdraw and when the employer can withdraw partially for pension and PF and everything. See, in these circumstances employee can withdraw fully their balances up in your PF account. If it isn't 5 to 10 lakhs amount is there, that how do you withdraw that? On retirement, once you completed this age, you can withdraw entire PF fund and pension fund and with entire balance. Or if you have unemployed is more than 2 months, since last 2 months you do not have any employment, so you lose your job or you quit your job and you are waiting for new job for more than 2 months. In that case, after 2 months of unemployment, you can withdraw your full amount for your necessities. And then death of member, if somebody has happened to the member is unavailable, not in a, I mean, is not available with us. So in that cases, nominee can get this full amount along with insurance claim. They can up to 7 lakhs proposed for 10 lakhs. Right? So this also they can withdraw at the time of death cases. And then permanent migration abroad. So you are going to leave India to the foreign countries. So you are going to leave India permanently. So you got job there, or you don't have an intention to return back India and do job here. In that cases, if PF Act will allow you to withdraw entire your funds for your expenses. And then there are few partial withdrawals, and which is separate route. It is called advance withdrawals or something. So if you are going to construct out house or purchase a new house, in that case you can allowed up to 90% of your PF, but you should compile 5 years of minimum service. So you should hold uh, PF account from 5 years from date of joining to date of withdrawal. If you completed 5 years here, you can able to withdraw up to 90% of the PF for a construction of house or purchase of new house. Even though it is an advance in PF Act, you don't need to repay this. Okay, for house repairs and renovation, if you are repairing your house or renovation, you can withdraw up to 12 month wages. So this is also you need to compile 5 year services. And for marriage, it is a one time event, right? We need to celebrate. So for that, it is allowing employees 50% of the employee share. So say suppose out of this 5 lakhs, the PF fund 5 lakhs, 3 lakhs is employer share. I mean 3 lakhs is employee share, 2 lakhs is employer share. So in this 3 lakhs, you can withdraw up to 50% of the employee share entire on this. You can withdraw up to 1.5 lakhs for your marriage. But to do that, you should completed minimum 7 years of service. So no, not repayable. So for education, for yourself or your children, in that case, same like this, only 50% of your employee share will allow. For that also you need to compile 7 years of service. You don't need to withdraw this. And medical emergencies up to 6 months of basic wages you can withdraw. You don't need to compile any service for that. And natural calamity or COVID recently after 2020 added natural calamity, like if even earthquakes or any bad instances in your state or something, that if due to that circumstances, you can do withdraw 3 months of basic wages. This is also not required, this service minimum service requirement under these forms. So so pension will be withdrawn on this retirement and this death cases, death case under and other than these cases, you can get that pension amount on retirement only. Okay, pensions will not give after before retirement, right? That's why. And then taxation, I hope you already know this. Employer contribution and interest and withdrawals, with all these are exempt. Let's go by one. This is called three exemption subject to recent budget amendments. So entire this employee contribution up to 1.5 lakhs deductible under ATC. Employer contribution is not taxable in employees' hands up to 12% of the salary. So there are two contributions, right? Employer and employee. The employee is giving PF account. So up to 1.5 lakhs, he can exempt as you can deduct under ATC under old regime. Okay, and employer contribution, it is going to reduce in your salary. Say suppose your salary is 20 lakhs, out of which 1.5 lakhs is, I mean 2 lakhs or 1.5 lakhs is employee salary. We will reduce that 2 lakhs, and then on 18 lakhs only we will calculate the tax. So in this situation, both the employer contribution and employee contribution both are exempt from the tax. So this is 1E covered, exempt 1. Exempt 2, interest on PF account you will get some interest, right? 8.2 8.5% interest. On this interest, EPF interest is completely free, but only contribution up to 2.5 lakhs per year. 5 lakhs for government employees. Okay, for government employees up to 5 lakhs is exempt, and up to 5 lakh is exempt. For regular employees up to 2.5 lakhs, non-government employees up to 2.5 lakhs is exempt under interest. So this is the second E, exempt, triple E exemption, right? So on withdrawal after completion of 5 years of service is that is fully tax free. Before 5 years, TDS will deduct. In case of PAN, if you don't have a PAN, 20% will deduct. The deduction reversal available in ATC applies. I mean, TDS will deduct, so you need to calculate tax as per your regular threshold limits. So if you are more than 5 lakhs or 12 lakhs based on your year of withdrawal, that will be taxable. But after completion of 5 years of service, it is fully exempt under PF Act. Okay, so all these exemptions are available. So in 2026, the interest pertaining announcement is there. So this is already covered with that. And then employee pension scheme complete guide. So employer pension scheme out of say 15,000, 8.33%, 1.25 has to go to government pension scheme. Government contribution would be 174. Apart from that, the employee don't need to contribute anything. So visiting minimum 10 years of continuous service for this pension scheme. So pension has been started after 15 years or reduced to 50, whatever it is. The age limit has been still finalized. So but for pension, 50 has been age has been reduced to pension 50. So minimum monthly 1,000 pension will give, irrespective of their calculations. Minimum 10,000, 1,000 will give. Now they are proposed minimum for 7,500. And pension formula: pensionable salary in the years of service divided by 70. This will calculate your pension amount. If it is less than 1,000, they will pay minimum 1,000 as of now. Now they are revising this to calculating 21,000 basis and revising this to 7,500 something. So these are the benefits. Once you completed this calculation, these are the benefit. These are the pension schemes available for you guys. One is superannuation pension. At the age of retirement, for next 10 years, lifetime, you will get the pension. This is called along with lifetime along monthly pension. So until your life, you will get these. So at the age of 60, you just wait one more 10 more years one time, and then you will get the lifetime pension. Every month you will get that pension. The yearly pension are 50 or 57 years. You started taking pension from this month only. I mean this for this years only. Then pension reduced from 50 and reduction 4% per year before 58. Okay, and it's widows are widow's pension, that will on death of the member, 50% of the member's pension paid to widow of his for her life. So for her entire life. So suppose your pension eligibility is 1,000, so 50, I mean 500 will pay every month to your partner until her life. And children's pension, 25% of the member pension up to children that's above the age of 75%. After this, so these are the options available. If you opt this option, you don't need to compare all this, and you don't need to, you cannot available another options. So orphan pension, both parents died, and 75% member pension to the orphan students. And scheme certificate, once service is less than 10 years, get certificate on rejoinings or several totals. So these are the this is the compliance part. So this is the guide of the pension, how we can withdraw and all. These are the penalties if you compare. These are the very important for employer's perspective. Once you non-payment of contribution, so you deducted from your employee and you didn't pay to the government, that is imprisonment up to 3 years plus fine. So this is there are few imprisonments cases. So false statement or fraud statement, if you did that, in these two situations, the damages would be very huge, 25% up to 25%, even though sometimes they will pay 100% damages also at the discretion of the officer. They can in this fully plus recoverable plus dues for the false statements. If you collected from employee and you don't, if you want to hold with you, and if you delay, it would be the imprisonment and fine and the damage. These are along with interest. interest on delayed payments is already 12%, and from due date to actual payment date, this is anyways there. But apart from this, you can able to find the damages up to 5 to 25%. Sometimes it will go for 100% also, based on your payment day at the discretion of the officer. And then damages of delayed payment, again there are they will charge the damage will be 5% or 25% per area. And also if it is more than 12 months, it will be 5%. If it is within 12 months to 24 months, 10%. If it is more than 36 months, it will 25%. So on the 25%, you need to pay the damages. And also determination of dues by so and so team. So if the team audit your firm and they determine any new claims, that will be regional PF officer determines the amount in the PF audit, so that will recover plus interest plus damage, that will recover with interest along with damages. And the attachment of property, yes, they can attach the property if you don't pay, for recovery of errors and default for defaulters. I hope you understand this actions taken by the PF department if you don't pay PF amount to the government fund within a specified time. So I hope you understand this. And then what is the difference between voluntary EPF fund and NPS and Provident fund, public Provident fund? Most of all are same. So this is the mandatory plus voluntary. This is the mandatory, means up to 12% you should need to pay. More than you can pay after that, and also up to 20 plus employees you can cover. Less than 20 also you can voluntary design this. So salaried will covered, and all this all these bases are same till we decided. This is the National Provident Fund. This is completely different. This is for all citizens. Voluntary government scheme. It is flexible. Government employees only can able to opt this, and also linked to 9 to 5%. Earlier it was 8% only. Now it is increased to 9 to 9. So in this scheme, you can get 9 to 12%, and then 50,000 will extra benefit will come for the if you provide the pension scheme fully exempt on withdrawal, 60% for exempt and 40% for annuity benefit. This is the NPS scheme. While I telling the NPS Act, I will explain this more. It is more detail. This is a public provident fund, fully voluntary. If you want to, all residents, if you want to pay PF on your own, you can pay. This is also same. Contributions will come. There is no employees match will come. And this is also fixed interest rates up to 1.5 exempt, fully exempt for withdrawal, and the interest on the minimum year 15 years, a single account only. This is a voluntarily if you want to pay with, so if you want to take the PF account, you can do under this scheme. So this is just for information purpose. If the NPS is a completely different act, and I will give the complete different video on the NPS. It will be separate concept now. I already discussed these latest updates. What we come from 24 to 25. They increased pension and final deadline extended, and then portals access as given, and then 2025 confirmed auto claims and increased interest to 20.25%. In 2025 budget, wage ceiling hike has been increased, and the ICE means if it is increased, the higher employees will cover and higher PF funds will come. All these are been pending as on date. So they still expected to cover in 26-27, I mean next financial year. Okay, so we have covered entire what are the three schemes available in AF, and who are the covered, and what is the wage limit, how percentages will go, and what is the interest will come, and what is the 5 years benefit, and how we need to register, and what are the penalties. All these we have covered. With this, I am closing this video. Thank you guys. If you feel we are giving efforts to understand PF Act to you, please subscribe our channel and like in this video, and share this video to your friends for their information. Thank you for your time and watching this video. Bye bye.